Hey guys, how you doing? Good day, good day. So today we're going to go into day trading for cryptocurrencies. When it comes to day trading for cryptocurrencies, we have many different ways we can do it. Spot and leverage trading. There's also future and margin trading. But for this video, we'll be going over spot and leverage trading. There will be a link on the bottom of this video of a great content provider on YouTube who teaches how to do futures trading and margin trading as well. So spot versus leverage. Basically, spot is just a way when you're trading just your money. If you're trading $1,000 and the signals call for a 3% increase, you're gonna make $30. That's your 3% increase right there with $1,000. So that's basically what spot trading is. You're using your money and you're not using any kind of leverage, any kind of margins to increase the money you already have. With leverage trading, what you're doing is you're allowed to leverage your money. So if, let's say with that same example where you're making a trade for a 3% increase, but you're leveraging that trade up to 10 times, it turns your 3% increase into a 30% increase. So instead of making $30, you're making $300. But the downside of that is that if it goes down 3%, instead of losing 3%, $30 on $1,000, you will be losing $300 on that $1,000. So that's the downside, upside to leverage trading. As you can see, we got some pros and cons. When you do spot trading, it's really hard for your account to go to zero, but that can happen quicker in leverage trading. With spot trading, you can't leverage, so you can only make as much money as money you have. But when you're doing leverage trading, your profits amplify. So those are just some of the benefits and cons of both spot and leverage trading. Feel free to go back to this point whenever you want to look at the pros and cons. I won't go over all of them right now. So right now we're gonna go over an example trade. I'm actually gonna go through a live setup of how I'll set up this trade if I was doing it for myself this day. So as you can see, the trade is a day trade. It's for XRP, aka Ripple. This is not actual trade I'm gonna actually take. I don't think it's gonna actually work, but I just want to give you guys an example for this video. As you can see, I have entry. Entry basically means at what point am I gonna enter the trade. Right now, currently, when I made this, Ripple was at 0.2. It was at 0.20. So I have the entry of 0.28. That's exactly when you enter the trade. You can see it says buy stop. That means we're not going to enter the trade until it hits that entry. Take profit is a point that we exit the trade. So there's different take profit points. As you can see, I have 1, 2, 3. The higher it goes up, that's the more profit you can make, of course. Then we have stop loss. So once the trade hits its entry point, the stop loss is at the point that you will close the trade. You can put stop losses automatically, or you can set alerts for them as well. Just depends if you're doing spot trading or leverage trading. I'll show you guys examples of that as well. All right, so for this example, I will be using 3 different apps that I would use for either spot trading or leverage trading. I would use my Kucoin for my spot trading, and I would use my MetaMask for my leverage trading. I'm also going to leave links down below on this so you guys can see and use the ones that I use as well for these apps. So you can use these apps as well. And FTX is how I set alerts. So right now we're in the FTX app. This app is also great for tracking your portfolio with crypto. As crypto wallets, you can have your money all over the place. So it's the best way to track it. But we're not going to talk about it today. We're going to talk about using the FTX app to set alerts for us. So right now, as you guys remember, our entry point for Ripple XRP was at 828. And right now we have XRP at 0.821. So what we're going to do is set an alert for that. So I already have an alert set up for XRP when it has a price change, but for this example right here, what we'll do is you're going to put one time. You're going to put in the price of entry. It's 828. What I usually do is I try to get an entry alert a little bit right before the entry point so I don't miss the entry point. So for this one example, I'll use 827 for our 828 entry point. I'll go over to the exchange I'm going to use. I'm using Kucoin for this example. So I want to see the Kucoin average. And we want to make sure we get the right pair. Remember our pair was XRP against USTD. So we're going to trade it really quickly. Change it really quickly. And there you go. Now our alert is saved. Now our alert is saved at the price we want to get in. Save alert. And you're good. All right, so now we are in the Kucoin account. As you can see, it has spot trading up at the corner. Right now, this is where you can buy and sell things. Of course, we're going to be in the buy screen. Right now, as you can see, we can't really do the trade because we haven't hit the entry point. But I'll just go ahead and do a hypothetical situation that the entry point is there. So let's just imagine that it is there. So we'll put 828 and the amount you want to buy. Let's say you want to do, you want to go ahead and do just 1,000 shares of XRP at this price. This is how you would buy. I'm not going to activate it now because we haven't hit our entry point yet. So let's say that the entry point has hit and now the buy is live. I already have some XRP on this account, so I'll show you guys how I would go ahead and do my take profit points. Usually I have a rule of thumb. It just depends how I'm feeling with the trade. So for this trade, I'll go ahead and do 50-50. I'm gonna do 50% of this trade. I'm gonna close at take profit point 1, and 50% I'll do a take profit point 3. So our take profit, if you guys go back to the earlier slide, the take profit for our trade example, the take profit point, the first one was 0.834. And remember, we have bought 1,000 shares of XRP. So I will go ahead and put in 500. And I would put in sell. And as you guys see, we now have that order in right now. I don't know what that trade was. I took that trade off. We now have that order in right now to sell 500 shares at 0.834. Then I will put in the other 500 shares from our hypothetical situation of having 1,000 shares of XRP. And I would put it at 0.861. That is our last take profit point. And I would go ahead and hit sell. And there we have it. We have our 2 sell orders right there. That's the great thing about spot trading. Once the entry point hits, you can go ahead and put in your sells for the further take profit points, and you can walk away, allowing you to have more time to do other things. Of course, if the trade's going bad, you may want to check in here and there and say, hey, I'm going to go ahead and close it out. I don't think it's going to hit take profit point 3. Sometimes I put 4 take profit points as well. And then you can just go ahead and close out at that point so you don't lose any more profit. But this is a good way just to put the trade-ins and walk away. So now we are in the MetaMask Trader app. So with this app, you can go ahead and do leverage trading. We open it up, we go to quotes, we see XRP against the US dollar. We'll go ahead and do new order. And remember, I had buy stop. This is extremely important when it comes to leverage trading versus spot trade. You want to make sure you're putting the right thing. You want to put a buy limit in or a market execution. Market execution means the trade goes in immediately. Buy stop means that it won't go in until it hits the entry point. So we'll go ahead and put our entry point of 0.828. And then we can, the great thing I love about leverage trades, you can go ahead and put your stop loss in. So everything's automatic once you do it. 0.816. and then we'll have a take profit point. Now you can make multiple take profit points with this. That's just multiple trades you open it up. So for the sake of this, we'll go ahead and just use the last take profit point at 0.861. So there you have it. Now the great thing about leverage is, as you guys can see this number right here, this allows me to increase my leverage right here. Just depending on how high I want to go, how high I want my risk to go, I'll go up on the leverage right here. So you can go super high with this. But of course, the higher up you go up, the higher risk that you're going to incur. So I relatively stay pretty low. With this, I'll use a 0.10 lot with this one, or a 0.2 lot with this one. The higher so I go up is a 1 lot. Not 1 lot, I mean a whole dollar lot. I'll put also example down in the link of what these lots mean for leverage trading. That's a whole different subject, but it's just an example of how I'll put the trade in. And once you put the trade in, everything will activate automatically. It will activate once the buy stop hits. I mean, once the entry point hits, it's gonna go ahead and activate, and it won't close until the take profit point hits. Great thing about leverage trading is you do it once and you can walk away. It's beautiful. So that is pretty much the example. I went over how I do a spot and leverage trading with an example trade for XRP. The one last thing I want to touch on is how, if you guys are in the trading signal group, how you would look at the trading signals I'm going to set. So as you can see, this is how it will usually be set up. I'll put on the top if you see a day trade or a week trade, the level. We have 3 levels, level 1, 2, 3. 3 being the most risky trades based off of my analysis. I'll look at the trade, based off the volume and also the market, where the market is at the point, the market volatility. And 1 being the least risky. Of course, with every trade there is going to be a risk. So 1 is not no risk. It's just least risky than a 2 or 3. Then I'll put in the trading pair underneath that. And then I'll put in whether it's a buy stop or a sell stop, which is really important for those who are doing leverage trading, future trading, or margin trading. And put the entry point in next. Then we have TP, that's take profit point, your target point, but just take profit point. I'll have anywhere from 2 to 4 take profit points. So, and that's what you're looking at right there. And SL, which means stop loss. So stop loss is basically, at this point, we're going to exit the trade. Now, stop loss to me does not count if it has not hit the entry point yet. The stop loss is only activated when it has hit the entry point. Well, that's pretty much it for day trading cryptocurrencies. Thank you so much for your time. Blessings.